Hey guys, Mike here of MKChip. In today's video, I'm going to be showing you a quick way to analyze your 30-year mortgage that you may have never considered. A lot of people ask me, Mike, should I pay off my mortgage early? Mike, when should I pay off my mortgage? Or how fast should I pay it off? This video and this information is going to help you analyze your mortgage from a different angle that maybe you haven't analyzed before. Because after all, we want to use your buckets of cash as wisely as we can. Man, I would be so loaded if this was real money and not just some bucket of cash I bought from Walmart. Don't laugh at me. I seriously bought a bucket of cash from Walmart. Go! Okay, so in this example, we're looking at a home. We're gonna pretend we purchased a home for $175,000. We've made a 20% down payment of $35,000, and so we are now stuck with a beautiful 30-year mortgage balance of $140,000. So in this example, we're gonna be looking at a $140,000 mortgage. Now, it doesn't matter whether what the mortgage amount is or what mortgage interest rate we're paying in this video, because proportionally it's going to be the same for any 30-year mortgage. So let's go over and let's analyze this. Alright, so using an Excel template I found online, and I wanted to use an Excel template specifically because you guys can actually go download this for yourself, and it's super easy to use. All you need is Excel. And if you don't have Excel, there's other templates or other apps on your phone I'm sure you can find to run this type of analysis. So what if I asked you guys how long you think it would take until you've paid 25% of the total interest on this mortgage? What do you guys think? Well, first of all, you'd think, well, that's easy, Mike. You just take 30 times 25%, and that should be the correct number of years, right? Wrong. Actually, after 5 years only, you would have paid 25% of your mortgage interest at that point. So how soon do you have to pay off your mortgage in order to save 50% of the total mortgage interest? Well, 30 years mortgage, well, half of 30 years is 15 years. That's gotta be, if I pay it off in 15 years, that should save me 50% of my mortgage, right? Wrong, wrong again. Actually, after 10 years only, you would have paid 50% of your mortgage interest to the bank already at that point. Now, and of course, if we continue this further, how many years do you have to wait until you have paid a total of 75% of your total mortgage interest balance? Well, that's after about 20 or 21 years. So it's really different than what you might have originally thought. Okay, to find this template that I'll be showing you guys in this video, you can come to this page and I'll leave this in the description below so that you can go directly to this page, and you're gonna hit the download button right here to get the loan amortization schedule template that's already been made from you. From that point, all you do is come here, and then you're just gonna drop in the value of your loan amount or your mortgage amount, the interest rate you want to use. In this case, I'm using 3.625%. That's a period of 30 years in this case, or for this video. If you wanted to do a 15-year, you totally could. You just drop in 15 years right there. We're going to say that we're only doing 12 payments per year, which is 1 payment per month. And just for kicks, we're saying we're starting the loan as of 1/1/2013. And then once you have that information in there, what it does is it generates the payment amount, your monthly payment amount for your mortgage. It says the number of payments, the 360, and then of course the total interest on the mortgage itself, which you can find that under the cumulative interest column. So if we scroll all the way down, if we were to follow this schedule to the T, this amortization schedule, we would have paid $89,849.86 after 30 years having this mortgage. Now, the quick and easy way to find out, how much your mortgage is costing you and over what period of time is really, I've done this quick analysis, and you can do this too. It's super simple. You just have to have basic knowledge of how to use Excel. So the first column I look at is what percent of my total mortgage interest did I pay? So I'm interested in at what point do I pay 25% of my total mortgage interest. So 25% of the total mortgage interest is, of course, $22,462. And so what I do to find that, and I say it's 5 years here, what we do is we know that 25% is the $22,000 amount. So I scroll down here, looking at the cumulative interest column, and also paying attention to the date column. So we start in 2013, of January of 2013. We go down to cumulative interest. Once we get to this point where cumulative interest is around $22,000, that is when we've paid 25% of our total mortgage interest. And so really, this happens sometime in 2017, almost 2018. So roughly 4 to 5 years in, you've paid 25% of your mortgage interest. Let's go back up to the top. So what about 50% of your mortgage interest? Well, 50% of the total mortgage interest would be $44,000 in this case. And that occurs in about 10 years. So using the same concept, focusing on the total cumulative interest column, we're just gonna scroll down. We're looking for around $44,000, and I've marked it. It's in this region. And then we are now we're in 2022. We started our mortgage loan in 2013. So roughly 9 to 10 years. At that point, you've paid 50% of your mortgage interest. And you could do the same if you wanted to find at what amount you know, in total you've paid 75%. But really, it would have occurred, I'll save you the time, about 21 years in, you'll have paid 75% of your mortgage interest, as I said previously. So that's just a quick way to analyze this and to help you decide if you should, you know, how fast you want to pay it off, when you should pay it off, etc. If you're trying to decide whether you should invest your money, pay off your mortgage, hopefully this will give you a different perspective of how this works. Now let's go over to the next screen and let's see how much in total, if we kept this mortgage, how much more our home would cost us if we just paid every payment just as we were instructed to. So how much in total did we pay for this home with our 30-year mortgage? If the home originally cost us $175,000 and we followed the amortization schedule of our mortgage payment by payment to the T, we would have paid an additional $89,000 or so of interest. So $89,000 plus the $175,000 that we originally purchased the home for gives us a grand total cost of this home of $264,849. That's a 51% increase roughly over the original purchase price of the home. Alright guys, that was the quick and dirty mortgage interest analysis on a 30-year mortgage, just to give you a little different perspective of how you might look at it or how you might think about it when you're trying to make the decision if you should pay off your mortgage early or how fast you want to pay it off, etc. I hope that helps you guys. If you haven't already subscribed, you know what to do. Make sure you do that right now. And if you enjoyed the video, if you learned something new, make sure you hit the like button before you leave. Share this information with a friend or family member, especially one who's thinking, oh my gosh, do I need to pay off my home early? Or who's been thinking about paying off their mortgage. I'm sure they would appreciate having this information. And of course, I will leave a link to that spreadsheet I just showed you, that template, in the comment section down below and in the description section down below, so you can download it for yourself and use it to your advantage. And until then, until next time, I hope you take this information you learned today and you use it to live your life uncaged. Love you all. Thank you for your support, and I will see you in the next video. Bye, everybody. Peace.